Your Life in Sex Island, Chapter 5, picking up the tab, page 169. We are continuing our examination of our tax system to determine how to make it slightly fair. Now, no one but a professional liar pretends that our tax system is fair. And the professional liars say that the rich pay too much. Duh! We have looked at the existing system and shown just how wacky it really is. We have shown how the poor and middle class are robbed. Now let's talk about the fairest tax of all, the tax on wealth, the wealth tax. If it has been fair for all time to confiscate the wealth of the poor to ensure that they cannot get a start in life, certainly no one will object to a small tax compared to the tax on the wealth of the middle class, on the wealth of the wealthy, which now is not taxed at all. The taxable wealth of the USA can only be estimated now. Until 1976, the U.S. government put out a statistical abstract which had all of that information in or on it. But the public was learning too much about their government, so of course they could not be allowed. We cannot have an informed citizenry, heavens forbid. It is out there somewhere on the great internet, and dwellers in statistics could probably code it from memory and break it into its rainbow of components, IRAs, stock, bonds, etc. The GDP is 13 or 14 trillion. From this GDP, I figure that the taxable wealth must be about 10 times that, or 130 or 140 trillion. I have seen figures that would indicate that that was twice too high, and others indicating that it is even 10 times too high. Total federal tax revenue is a little over 2.7 billion. Of this, 1.25 billion comes from individual federal income taxes. Business net income was about 270 billion, reported on the tax returns. An order of magnitude estimate for the value of the assets that produce that 270 billion would be 3 trillion. Total state revenue, taxes, license fees, is about 750 billion. Municipalities in the U.S. also require about 750 billion to operate. That's my estimate. Using Bureau of Census numbers for medium household net worth, the percent of that net worth that was income producing, and the number of households, one can estimate or calculate that the taxable wealth is about 4 trillion. Other approaches confirm that 4 trillion is a reasonable estimate for the financial taxable wealth, income earning wealth, not residences in the United States of America. A 1% tax on 4 trillion would yield a revenue of about 40 billion. Total revenue required to be raised from the wealth tax is about 1.5 trillion. The new income tax rates would raise about 2.7 billion. This table shows a suggested tax for the wealth tax. And you can see on top it's taxable wealth, tax rate, revenue raised. These are estimates from various sources, including Forbes' Richest Americans. As an engineer who has made thousands of estimates of future costs and revenue, I am usually pretty good at it. However, this is a moving game. Whatever strategy we try, the players and coaches can adjust, and then the original assumptions are far afield. Also, I had information, for example, on how many millionaires and decamillionaires there were, 2,000, but no information on anything in between. For example, how many 5 millionaires there were. So I filled all that in by guess, by God. Also, my data is a little dated. The info that I had claimed 51 billionaires. Now in 2008, Forbes' 400 richest are all more than billionaires. So the actual revenue would likely be considerably larger than my estimate. Let me give two examples of how these taxes might alter the behavior of individuals reacting to the suggested changes. Suppose you are a 3 billionaire. Let us suppose that the above tax rates are enacted suddenly instead of being phased in over, say, 5 years. Suppose you are running about a 20% return on investment before the suggested tax rates. First, before the suggested tax rates, you will be paying very low personal income taxes, and you will be paying no wealth taxes. Your wealth will have been growing faster than a mushroom cloud. You could not spend all of your income, much less all of your wealth. Meanwhile, the wealth of the poor has been taxed to death. The poor will be renters or homeless all of their lives because they simply cannot get ahead nor escape the tax collector. You, on the other ball, can afford the best tax avoider that there is, say an ex-senator. You'll be taxed at maybe 0.5%, while the poor will be taxed at about 20%, or a rate 40 times higher than you. You think that that is wonderful. I don't. Your income would have been about $700 million. $100 million salary plus bonuses plus $600 million return on investment. Your income taxes would jump from about $8 million to about $679 million, leaving you with only an income of about $2.7 million. I am not shedding any tears. What happens if you are only moderately wealthy? Say you are a 3 millionaire with a salary income of $300,000 and a wealth income of $600,000, or a total income of just less than $1 billion. Then your income tax would be about $600,000, leaving you with an after-tax income of $300,000. Your wealth tax would take about $120,000 of that, so that your wealth would grow by about $180,000, less living expenses. We will continue with this discussion, and I will be right back. Purchase the book now by clicking on the link in the description below.